let's just take a look at meantime Maruti Suzuki. It has delivered its third quarter numbers. Just the perils of slow internet, but yeah, that should just come up for you on your screens. You can already see some of the numbers flashing. We have the profit after tax figure, which has come in at 1,942 crore rupees versus 1,564 crore rupees. Let's see what our expectations were. By the way, we were expecting a number of 1,850 crore. So I think 100 crore beat, not bad, almost a 7-8% beat compared to what our ET now poll was. Revenue, which is usually the case, bang in line with expectations, a growth of roughly about 13%. The margin has come in a little lower than expectations at 9.5%. So I think it's a bit of a mixed bag with revenues and bottom line coming in line with expectations, but margins are below expectations. I'm just going to fast forward to the presentation. Compared to the corresponding quarter, we've seen good volumes, higher by 13.4%, and that's the sales volumes, and the profit, the net sales have been upped by 13%. Okay, we have Abhishek Jain of Daulat Capital joining in to talk about these numbers. Hi Abhishek, let's talk about that margin number, because I think that's come in a bit below expectations. Is this something that you would be surprised with?
So numbers are slightly below estimates, and we are expecting margin around 10.5%. But it is 9.5%. The main reason is that the commodity prices inflation is quite significant in core commodities as well as precious metals. So there's a sharp jump in the RM prices quarter-on-quarter basis. However, the company has already taken the price hike up to 3% in January. So and discount is also going down. So most probably that this margin pressure will mitigate because of the price hike.
Okay, so yeah, I mean, we know steel, aluminium, precious metals, all of them have surged quite a bit for Maruti Suzuki. For auto companies, 50 to 60% of their raw materials is auto grade steel and aluminium. So obviously you're going to see, their cost as well being hit. But yeah, there are price hikes taken. Abhishek, these price hikes that the company has taken, do you think that it's enough to cover the rise that we are seeing in these raw material costs, or do we anticipate perhaps some more price hikes?
January, the company has taken average price hike up to the 2.5 to 3%. There's a requirement of price hike of between 4 to 4.5%. So most probably that the company may announce another price hike. However, another positive thing that discount is going down, and that's why the company would be able to manage the margin in the coming quarter as the volumes pick up.
Well, yes, the discount is going down, so perhaps cost management will be a bit better. Abhishek, just stay on with us. We also have Ashwin Patil of LKP Advisory joining us now. Hi, Ashwin. Your initial thoughts, because the numbers are, I think it's left investors wanting a bit more.
Yes, absolutely. I think so, because despite volumes being better in this festive quarter, literally the numbers have come below expectations. But I think that somewhat discounting was there. I mean, it was not as high as it used to be earlier, but somewhat discounting was there, as well as the raw material prices have started firming up, and that's the reason why the margins have come below, and the PAT has also come slightly below our expectations. But yes, it's a marginal, marginally lower than what we were expecting. The revenues have been quite light. Going forward, I think that the price hikes that the company has been taking on various vehicles, its models, especially Ertiga, Eco, etc., that will be able to offset the raw material price hikes that we are seeing now. And also the discounting will be going down, and definitely we will be seeing a better quarter of Q4 on volume front as well. So I think that on and on it's a good, not so great or not so bad set of numbers, quite in line with what we were expecting.
Ashwin, do you think that now that there is more confidence coming in on auto demand, on volumes? Do you think now the focus will shift on how well the auto companies, the auto pack can manage their costs? And do you think that which company do you think is a leader on that front? I mean, Maruti, of course, is number one. So do you think that that gives them an edge as well compared to other auto companies?
Hello.
Yeah, Ashwin, the question was for you. Do you think that now the focus will shift to margins as opposed to top line? And do you think that perhaps gives, do you think Maruti would be more astute in cost management, will have more pricing power as well compared to other auto PV players?
Definitely, Maruti being the number one passenger vehicle segment and has a very good command on the in the market segment, and the price hike that the company has been taking that will be able to keep the margins buoyant. But the thing is that even the personal mobility thing is still going on well, and the volumes also will be not as bad as the industry is expecting. So I think that overall the combination will be good. The product mix will be playing well, and overall the discounting will be low, and that will be helping to offset the raw material price hikes. And I think Maruti has got that pricing power, definitely being the market leader. And other companies are in the two-wheeler sector like Bajaj Auto. The numbers we have seen, which were emphatically better than what everybody was expecting. So Maruti, Bajaj Auto and Hero, these are the three companies that we are expecting to maintain that pricing power in the auto industry.
Okay, gentlemen, I request you to stay on with us. We also have 18 Hours Auto researcher Karanya Rao joining in on some more details on these numbers. Karanya?
Hi. The reason why the stock is also reacting quite sharply and negatively to the numbers delivered by Maruti primarily is the margins performance, because that has been disappointing for the street as well. Yes, they have clearly mentioned that it's the adverse commodity prices that has sort of impacted them adversely and hurt the margins performance overall. But perhaps things would ease, like how the guest was also pointing out. They are now largely looking at mid-segment SUVs, so that's a segment that could get them better margins going forward. Of course, right now the product mix is also unfavorable because the shift of consumers' preference is clearly towards smaller cars. So that has also sort of been a bit of a drag on their margins. So going forward, now that they're working on SUVs, they're working on potentially a diesel comeback as well, things could stabilize, and this could perhaps be a one-off sort of a quarter for the company because of commodity costs and because of weaker product mix. But yeah, sales and profit, if you look at it, has been in line with estimates. But yeah, definitely what has dented the market sentiment and the mood overall, causing the stock to nosedive essentially, is the margins performance, which has been pretty below what we were expecting.
Okay, so in net, if I have to just summarize, Abhishek, let me go across to you then. From the auto pack, which is the one that's looking the most exciting to you, or do you think that perhaps there's more promise now in the two-wheeler names? I mean, we have seen that stocks like a Bajaj Auto, Eicher Motors, have really been rewarded very handsomely in these, especially in the month of January. Do you think that now there's excitement in these two-wheeler names as opposed to maybe PV players?
Two-wheelers, because that most of the pent-up demand has exhausted in two-wheeler side. So and the penetration in India is quite high in the two-wheeler space versus the passenger vehicle. So we continue to be positive on passenger vehicle and another segment that is on tractor segment. So we are positive on the Maruti as well because of increasing preferences for the personal mobility, low interest rate, and another positive that system inventory is quite comfortable, below the normal level of 30 days in the passenger vehicle versus the higher in two-wheeler space. So we continue to be positive on tractor and passenger vehicles over the two-wheeler.
Okay, Ashwin, Abhishek and Karanya, thank you so much for joining us to analyze these numbers from Maruti Suzuki. The stock, well, in the red, it was anyway trading with, very slimly, but these numbers have certainly triggered a nosedive of sorts in the stock price, primarily due to the margin performance. But, like our guest as well mentioned, let's see how, the reversal in price cuts, the pausing of discounts essentially aid its margins. We'll take a very short break. Don't go anywhere.